Good Monday. This is Jay Brew, co-chairman of Sea Freedom Brew. Well, will Greece default in here? This is a thing that supposedly is getting more and more pressure on the Treasury market with that flight to quality. If you remember, a couple weeks back we showed you a map that showed Greece's economy approximately the size of the state of Connecticut. So we wanted to make the point again in here. When we look at the GDPs of the United States, here's where we are, folks. Along with it, here's China in terms of their GDP, and down here is Greece. So when we think about this, we need to keep some of these things in perspective. We need to be thinking in terms of, is this a reality that is causing our stock markets to drop again in here this week below 11,000? Along with it, pushing Treasury rates with the 10-year getting down to a 191. And we have to look at this in perspective and to sit there and say, is this something that on a financial crisis level is really very overblown? Along with that, we wanted to talk again. We've been getting a lot of different commentary, a lot of different hits on our whole aspect of looking at how much do we pay in terms of the maximum rate on core deposits. And of course, my feeling is here in the short end with T-bills down near just zero on the 3-month is that we should not be paying more than 10 basis points for money. Along with that, in the 2-year at 1.18, my feeling is on CDs, we should not be paying more than 20 basis points on CDs. This getting a lot of different commentary, as I said. And some of the things that we really have talked about at a couple of ALCO meetings over the last week is look at the average amount that you have in different deposits. For instance, if you're looking at an average in, say, a money market of a $10,000, you're looking at 50 basis points being an additional $50 that people might not get paid if you cut those rates. Look at it from the standpoint of 25 basis points, $25. You then take it up to 50,000. 25 basis points is $125 a year. So when we think about the dollar amounts, and think about back when interest rates were higher. Interest rates were higher. You had a 4% CD, cutting it down to a 350. Was it really that big a deal in terms of how people would react in here? So if we keep these things in perspective, my feeling is that we've got to be out there cutting these deposit rates in a big way. We have to be thinking from the standpoint of not what the competition is doing. Because what a couple of bankers have told me is that when they then cut deposit rates in here, that what happened is that the competition cut them. So when we look at that, to be the leader in this is not such a terribly bad thing. Because a number of different things could occur. Like we talked about last week, the whole fear of money rushing out of the bank, which I think is really unfounded. But with the slowness in terms of generating loans in here, my feeling is that some shrinkage could be good for banks to go through during a time period like this instead of pushing against the strain. But this is not going to be an asset-driven situation. And my feeling is that this is a liability one, of which declines in deposit rates, moving them down into that 10 and 20 basis point type area will help to balance out the margin and not have to have your loan departments pushing in here. Because some of the deals going around, as we've seen, are just ridiculous. And to really push on that at this particular point in time, I don't think makes a lot of sense. So when we look at this and we think about it, is that let's look at it based upon volumes. And we want to really understand what our volumes of deposits and assets are in here and what is repricing. And how do we move these volumes around and look at it as a way to preserve the net interest margin. And that then leads to a certain pricing. My feeling is that when you look at the risk factors out there, that paying more than that 10 to 20 basis points doesn't make a lot of sense. Also this week, from the standpoint of the whole 9/11 situation, we've included a link on this email that I would tell every community banker, every community board member, you should go in and take a look at this CBS News story. This was done with our good friend Henry Cook out in Somerset, Pennsylvania, which is close to where the Shanksville Flight 93 went down. And when we look at this, it's all about outreach of a community that has a very, very involved community bank, being part of the outreach to the survivors and to the memorial of that horrible day going forward. So I urge you to take a look through this link and see what a wonderful story it is in terms of how the people of Somerset and its environs reached out to the survivors of that horrible crash. This is Jay Brew, co-chairman of Seafried and Brew.